21,350 homes from the $10 billion fund. Yes, this is the largest intervention we've seen yet from the government in Australia's affordable housing crisis. Round 3 of the Housing Australia Future Fund has been announced, and in order to hit that 40,000 national target, they're after that remaining 21,350. So what's the fund achieved so far? To date, we've had 18,650 homes awarded. Roughly 9,000 of those are currently in construction, and 889 have been delivered. We are currently 17 months into that 60-month delivery cycle. Now the haters will say we're nearly a third of the way through the time frame, with only half of the projects being awarded and only 2% being completed. They're conveniently forgetting, however, obviously it takes a year to build a house or 3 for an apartment. Which projects have been successful to date, what they're looking for this time around, and how you as your community housing provider, investor, super fund, Indigenous housing provider can start to work with government to put housing into your community where it's needed. Who you are will determine which bits you're interested in, so we're breaking it down from different stakeholders' ability, which you'll see the chapters to here, and feel free to skip through to all. The Housing Australia Future Fund's quite a complex arrangement where the government borrowed $10 billion at cheap government rates and moved that money then over to the Future Fund, who invests those funds in the stock market, and any profit over and above the interest payments is then moved to Housing Australia to put in as availability payments or rent top-ups to the housing providers. The community housing providers get that 25-year cash flow. That 25-year cash flow is interesting to investors who will invest equity or debt alongside the community housing. Community housing providers have really been the workhorses for the provision of social and affordable housing in Australia over the last decade. They're essentially non-for-profits set up specifically to build and manage this housing. So what hints have they given us so far on what type of projects they're going to favour in round 3? In the documentation, they call out well-located, high-quality, value-for-money projects that can be delivered quickly in metropolitan and regional areas. Now, when you double-click on this around locality, what they're really looking at is we can measure things like proximity to town centres, schooling, hospitals, very easily on our mapping software. Then also, in a previous video, we've mapped all the projects that got funding previously. And you see there's big gaps around the country that still need to be filled in. To jump to the quick of it, there's only been 150 projects, 150 dwellings approved in the Northern Territory, so anything in that zone is going to be key. Also, there's a dearth of stuff in Queensland outside of Brisbane itself, and a lot of the inland regional towns in New South Wales are very light on, as well as the regional towns in South Australia. The link to the old video will be in the comments section below, or just reach out. Elements like high quality and value for money are intrinsically linked. Don't be afraid of spending a bit more up front if it's going to result in a lot less maintenance at the back end. This is where the financial metrics of these projects are very hard. When you get beyond 10, 20 years where bathrooms, kitchens start to need replacing, also facades like hardware and bricks, much better idea than a lot of monoclad systems. But this is a head nod to the fact that, hey, don't be afraid to spend a bit more money on insulation, on solar, things that'll actually take costs away from the tenant or from the CHP further down the track. Those sort of initiatives will still be rewarded. Let's be clear about what streamlining means. It means the capital wasn't moving out the door fast enough. They had billions of dollars and they weren't able to allocate it quickly enough. There was a complexity that was holding the system back. They're now realising there's only 43 months to go to the end of the delivery window, and so they're wanting to put keys in doors as fast as possible. This desperation is a form of leverage that the community housing providers and applicants can use. If you have a DA-approved site, you are the cat's pyjamas or the milk to my cookies or whatever analogy we go with. How can councils and community groups get involved? So reach out to the community housing providers that are operational in your area. Ask them if they've got anything coming up. See how you can work together. This is a competitive process against other councils and other states vying for the same money. If you can get affordable housing plus infrastructure money spent in your neighbourhood, it's a win-win. What that means is you get the asset and you get federal government to pay for it. Marvellous. I'm aware of a housing provider, worked with a council in round 1, where they managed to get a DA over the line in under 30 days, which meant they were de-risked and they had a far greater chance of being successful, which they were in round 1. This is what can be done. This is how some councils are really lifting their game to be competitive and win. We love it and would love to see more of it. Info for investors. Superfunds manage your retirement and tend to not get out of bed unless it's a really big ticket item. They have a fiduciary duty to maximise your returns. And traditionally, affordable housing's been seen as a bit of a sleeping dog. Traditionally, a low cash flow yield. However, the governments came in and de-risked this, and de-risk it they have. The core mechanism is an availability payment, which essentially tops up the gap between affordable or social rent and market rental. The cash flows, 25 years. On the equity side of the ticket, the majority of submarkets don't hit the risk return hurdle rate. Now, essentially you end up with very low cash returns in Sydney and Melbourne, but then in the areas, secondary cities where you do have good cash yield, you end up with liquidity drying up in the market at certain times intermittently, and you essentially end up with exit risk. On the debt side of the ticket though, it's very appealing returns that's being seen in that sort of mezz debt sort of space. We're seeing a 25-year cash flow underpinned by a real asset and government cash flows. Housing Australia seems very aware that super funds need a certain scale and are ensuring that if they're in, that they are not ending up with undersized positions. Moreover, Housing Australia is rewarding the super funds for getting in. Those who were in round one and applied did tremendously well. The largest getting around about 20% of the overall build. Another major consideration for investors is who to partner with, and we've put the time into going through the balance sheet, getting to know a lot of these community housing providers. We can definitely help introduce you to some of the best good operators who are ready to flex and grow. There is $600 million that's been allocated to First Nations housing projects. To qualify this, you have to have an allocation for First Nations people of at least 10% within your project. For any First Nation housing providers who are interested in looking at this, we'll be happy to do a portfolio review of land. Heck, we also have the entire of New South Wales state government's land holding in our database if you're looking to partner with them. Also partnering on existing projects with community housing providers who are willing to allocate 10% to their project. It would help their application, and your endorsement would help secure housing. Please don't hesitate to share this with anyone who might find it interesting. And if you're on a project and need a hand, please reach out. We would love to help. We want to see more housing and more equitable solutions across the country.